You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back. It is time once again to rock out on your bi-weekly source for all things options. Yes, it is time once again for the Option Block. My name, of course, Mark Longo from the Options Insider Radio Network. Your home now for 19 plus years of options goodness. If you want even more goodness sprinkled on top, head on over to the Pro. As we go around the horn, see who's joining us on this fine, especially if you're feeling bearish, fine Thursday out there. First, we go out to the hallowed halls of Cboe East, where we are joined once again by the Flowmaster himself, Mr. Henry Schwartz from the hallowed halls of Cboe. Mr. Flowmaster, welcome back to the show, sir.
Hi, Mark and Mike and all of our listeners. Happy to be here. Yes, it's a little bit of a... I don't know. I guess I would say it's a little bit of an ugly market day. We see red across the screen, and VIX is a little bit ramped up. So, it's as we often say that the tide can turn very quickly in the markets, and that feels like that's what we have today. But happy to be here.
And then also joining us on a day when he's not happy to be here because it's the color he doesn't like. It's the uncleist of Mike's, Mr. Uncle Mike Tosaw. Mr. Uncle Mike, another red Thursday, sir. What did you do?
It's interesting. I'm looking at every Thursday in February. We're right around the 68.50 level about every Thursday in February. Because I was just, as we're getting onto the show today, I'm like, Oh, well, we're right back at where the market's opened at for the year again, and that's been the case. We're at 68, 67 right now in the SPX, but we're getting close to the 68.45 mark again, where we are every Thursday. So I think maybe the flow master just likes having the market right at where it started the year at every year, every time he comes on the show. So that's just what it is today.
It does make it much easier for his analysis. If it's in the same spot every week, it's easy to track. Let's see what else is lighting it up, listeners. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, welcome to the trading block, the portion of the show where we break down what the heck is trading out there. And we kind of already let the cat out of the bag. It's a whole heck of a lot of red. S&P off over 1%, about 1.15% now. Dow off, closing in on 0.5%, about 0.45%. And the NASDAQ off nearly 2% right now, about 1.95%. So NASDAQ taking it on the chin. Why? Well, apparently Nvidia's earnings, no bueno. Folks, even though they were a pretty stellar quarter, I think for any other company in any other context, would have been pretty darn good. But when you keep just knocking it out of the park, eventually just knocking it out of the park is not enough. Folks need more. They crave more. They demand more. And they are taking it to Nvidia today. They are venting their wrath on the world's most valuable company. At least it was. Maybe today's sell-off might change that. 185.5 is where it's hanging out right now in Nvidia, off over 10 handles, about 10 and a quarter handles, or 5.2%. This is worst day in Nvidia in nearly a year. I think you got to go back to last April to find another single day sell-off this strong, which again, going to come as an unwelcome surprise to a lot of people. We were profiling a lot of folks piling into those par calls, those 200 calls expiring on Friday. Remember, no 0-day weeklies on the days of earnings, listeners. So they were all going out Friday, and they were paying at least $4 for those. I think it was somewhere north of $4. So all that money pretty much went to die right now. We shall see how things progress throughout the session, but kind of a rough start to the day out there. VIX cash getting a nice shot in the arm again after kind of languishing for most of this week and getting killed. Back up to about a 20 handle. That still puts it down from where it was last show, but only about half a point. So a 20 handle, we'll see where we go from here, but things starting to firm up. VVIX at about a 109, up about 8 points from where it was on our last show as well. So yeah, things not looking bueno, even though if you were looking in the after hours last night, the initial move for Nvidia looked pretty positive as we were putting up the Thor show. Nvidia had rallied to around 204, maybe 205. So if you had those calls in your back pocket, you were thinking good things. Maybe that's your argument for having after hours trading. You could have dumped those calls for probably a profit in the initial blush post earnings. But ever since then, it's been all red on the screen. As we go around the horn, see what people have to say out here, see what's catching their eye. Let's start with the Flowmaster. Why not? Mr. Flowmaster, sir, kind of a wild turn. That's why we always say never believe the first blush of earnings season, because that first move is usually a head fake, and that's pretty much what we saw. What's catching your eye out there in a pretty blood red Thursday yet again, sir? I think you're a bad luck charm for the market.
Maybe that's what's going on. Actually, one of my colleagues mentioned that he bought a few 185 puts yesterday and ended up closing them out at a loss. Actually, I think he bought 190s. Stock was at like 195. This when he bought them. Stock was kind of there pre-open. He dumped them, and now they're in the money. So
he dumped them this morning.
Yeah, he dumped them when the stock was up. So it's kind of that kind of a day. And there's a trading adage for kind of every market in hindsight, and maybe this is a buy the rumor, sell the fact kind of thing. But it's an interesting tape. And one thing, year to date, the S&P is basically, we're still up like 0.33%, but basically, market is not, the S&P has not done anything, has not managed to hold on to any gains this year. However, the Russell is still up 6.5%. And I think I might have mentioned this a couple of weeks ago that, this Russell outperformance people talk about it, but it never really sticks. But it's kind of sticking a little bit more this year. So, you know, to see these, you know, the Mag 10 high flyers really pull back off of some of those valuations, which I think everybody agreed were either crazy or just super duper optimistic, might be kind of a healthy correction, right? Rather than the entire market just getting creamed, you just have kind of high profile names coming back down. And if the more industrial and small cap kind of Russell 2000 complex is where the capital's kind of flowing into, you know, then it's more of a big kind of rotation, sector rotation or market cap rotation. And that kind of feels a little bit like what we have. One thing that I think is really interesting is, and we were at Bloomberg yesterday, Mandy and Ed and I running through that VIX decomposition model, which we've talked about. And one thing that's kind of interesting is, you know, the S&P skew, right? How kind of steep the puts are versus the calls has been at the high end, like in the 95th, 96th percentile for a couple of weeks. And what that gets you is that when the market does sell off, you don't quite get the panic. You just get a little bit of, it's already priced in that, you know, yes, VIX is up 2 points today or so, but that's not actually any real excess volatility. It's not really changing kind of what the market expectations were. So, you know, so far it's a very orderly kind of sell-off. It's definitely a sell-off. And I think, you know, when you people got pretty used to the market going up, you know, between 9 and 20% a year for the last couple of years. And, you know, this might be a little bit of a reality check.
A reality check indeed. That has to hurt. If you went out there, you actually shelled out for the puts. You were on the right side of history, Mr. Flowmaster. But I get it. You know, history has also taught us that if you have long premium, we just talked about this on our Options Bootcamp show just yesterday. If you have long premium, you got to bail on it right after the announcement 99 times out of 100, because otherwise you're just, whatever juice you have left is just going to go the way of the dodo. So that guy did the right thing. Unfortunately, Nvidia decided to catch up. That's got to hurt. You shelled out for the puts. You go against conventional wisdom. Everyone's buying the par calls. You buy the 185 puts, and then you bail for a loss. You don't even make money out. That's rough. Sometimes that is how the options worm turns. Mr. Uncle Mike, how's the worm turning over there in the land known as St. Charles, sir?
The worm is turning. The worm always turns. It has a constant treadmill for the worm as we turn. So, I mean, obviously, NVIDIA is the big story of the day today. We will have I believe we have producer price index coming out tomorrow. So that's something else that could move the market. But today, the obvious big story is NVIDIA. We are getting a little bit of a flight to safety, kind of, sort of. We're getting a little bit of movement in the Treasuries with IEF, the 7 to 10 year ETF that tracks the ETF that tracks 7 to 10 year government treasuries. That's up 0.2% on the day. TLT for longer term treasuries is up 0.3% on the day. So that is kind of where the money is going a little bit. Precious metals, we actually have GLD up 0.4% on the day. And then we have silver down 1.8% on the day, which is really very minimal movement for how the metals have been doing lately. IBM is coming back from where they were the other day. On Monday, I believe we got as low as in the low 220s. IBM, so you can say IBM's up 10% over the last couple days. Now, obviously, there's more to it than that. And obviously, someone came out and said, hey, we can do stuff better than IBM. So IBM went way down. And then now IBM's starting to recover a little bit, as that seemed to be a little bit overdone. We do have Apple, although it's down today. It is back over the 270 handle again. So Apple is starting to come back as well. I had mentioned JP Morgan earlier this week, went from 310 to 297, I believe it was, over the weekend, to back up at 305 today. So that is recovering. With the S&P down 1% on the day, we have small caps down 0.7 on the day, and then mid caps down roughly 0.5% on the day. So the thing that I'm seeing right now that I think needs to be noted is that if even though the markets are down right now, we are still positive on the year. And considering all the bad news that we've had in terms of we got problems with Iran, we have just with all of the macro theoretical bad news that we have, the tariffs are out, and then wait, that we're changing it to a 10% global tariff. There's a lot of uncertainty that's happening right now. And the fact that we're still positive on the year, I think bodes well as a case for the bulls. And so far this year, if you've been able to sell some covered calls at good prices, things have probably worked out pretty decent for you on the year with the 20 VIX. So that's what I'm seeing, Mark.
Let's go out and see what the rest of the market is seeing and or delivering today, listeners. Is it a banger day out there in market land? The answer is it's decent so far, not explosive, perhaps not quite as action-packed as you might think on a wild post Nvidia day would be, but the session is young. There's much more to uncover, including more VIX paper. I just re-racked. It looks like it's getting a little bit spicier, right as Uncle Mike was talking, because it was hanging out pretty close to 300K, now threatening 400K, 392,000 contracts on the tape. In VIX land today, your big dog in VIX land right now, 35,000 of the 18 puts in March going up for about 60 cents. So once again, people tilting at those 18 puts. They liked them at, 72 cents last week and then 68 cents or so. So you got to love them at 59, 60 cents, right? Either way, that's your big dog. Number 2, 27,000 of the 17 puts, 31 cents for those. Number 3, 25,000 of the 23 calls. Number 4, 23,000 as well of the 25 calls. And number 5, about 17,000 of the March 20s. If you're wondering what's a 20 going for right now with VIX cash flirting with a 20 handle, $1.98. That is your price out there, listeners. So interesting stuff out there in VIX land. VIX ADV also coming back to earth a little bit. Probably going to turn that around today, but 888,000. So receding off of that 1 million level, that is that flashing warning sign, that klaxon that, hey, something is going on in the market, pay attention. Still, 888, nothing to sneeze at. SPY also nothing to sneeze at. SPY closing in on 8 million contracts already, 7.55 million contracts on the tape in SPY land. Today, the ADV just a tick under 10, 9.9 million. So SPY has certainly been bringing the heat, and they're bringing the heat today. The S, same deal, 3.25 million contracts. So SPY and the S are liking themselves a little bit of Nvidia whipsaw action. The ADV, 4.6 million out there in the S right now. Small caps, the Flow Masters, beloved small caps, 1.35 million contracts right now. So small caps definitely feeling their oats out there. The ADV is 1.9. They seem like they're going to hit that today. Small caps, by the way, listeners, off 0.6% today. So kind of splitting the uprights amongst the other major indices out there. Let's look really quickly because small caps sometimes can be interesting with what they're putting up. They're not all 0 day all the time. Unless it's a wild day like today, then they kind of lean a little bit more 0 day heavy. And looks like the top 5 are all 0 day. Then we get to the March 251 puts and the March 256 puts going up about 59,000 and 55,000 times respectively. So there is a fair amount, I would say pretty much half of the top 20 in the small caps today are not expiring today, and some going all the way out a whole month. Remember when we used to trade that way in the equities? Remember when you would trade options that expired a month from now? What a wild concept. But that's what's going on right now in small caps, listeners, and it's adding up to a fair amount of volume. 1.35 million as of right now and climbing. And the Qs, let us not forget our old friend, the Qs. I said they're off nearly 2% right now, and they are reflecting that in the volume. They're 4.5 million contracts already in the Qs. That is pretty wild paper for this portion of the show. The ADV is 5.6 million, and they seem like they're going to hit that. They can hit that by the end of the show at this rate, listeners. I won't even bore you. I ran the analysis for my own edification, just for fun. I don't know how fun it is because it's always the same analysis every time. Actually, you know what? I take it back. I did find one Waldo lurking in the top 20. So 19 of the top 20 Most active contracts in the queues are all expiring today, with the exception of one. Can you guess what it is? The queue's hanging out 605 and a quarter. It's the par puts expiring tomorrow. There looks like the number 17 on our top 20 with about 68,000 contracts changing hands. So there you go. One of your top 20 in the queues has the temerity to not expire today. How dare they? All right, let's go out to the top 10 listeners. Is it a banger day in single name action land? The answer is it's closing in on respectability. I think if we waited about 5 minutes, we would be at our respectability threshold, which is 350,000 contracts. Not quite there, but we're pretty darn close. 342,000 contracts. And you know the top of our list is going to be a banger, so wait till we get there, listeners. But kicking us off, number 10, it's our old pal EOC. Yes, EOS Energy Enterprises, ticker symbol EOC, EOSE. This is the name we have talked about before, and we'll probably maybe get to it maybe a little bit later in the odd block. We'll see. But they had earnings, and I think, to put it mildly, they were no bueno. The stock is off 40% today, trading $6.91, off 4 1/4. So just an absolute bloodletting. That said, even with this just taking them out at the knees, the stock over the past year is still up 61%, or about $2.60. It was $4 pretty much exactly a year ago. So that shows you what a wild ride EOC has been on, including hitting a high of nearly $20 last November. So this stock apparently giveth and it taketh away, and they are taken away hard today. Number 10, our old pal EOC, 342,000 contracts on the tape for them. Absolutely wild stuff here, listeners. As we keep climbing to the number 9 spot, we'll see if we can find some other wild ones here. Either way, it's Micron coming in number 9, 360,000 contracts. Micron, they've been on just the mother of all tears so far this year, giving some back today, selling off $15 or about 3.5%, trading right around 414 1/4 right now. That still puts them up, even with this sell-off now, still puts them up almost 100 handles or 31% just year to date. Micron, it's like everyone suddenly awakened to the fact that Micron was a hot play to start this year, and they just had to have it. Just absolutely wild stuff. Number 9, 360. A good old Micron. Talk about everything old is new again. Micron was an old name when I walked on the floor of the Cboe, and bam, they are sexy and shiny and bright again. Number 8, is this name sexy and shiny today? Well, it's selling off $0.50. It's Palantir, 133.69, putting up 392,000 contracts today. They've been up, they've been down already, and it's pretty much just noon here. They've had a range of 132.63 to the downside, 137.51 to the upside. So almost a $5 range on the day, listeners, hanging out right around 133 3/4 right now. Just another wild day for Palantir. Number 8, 392. At least it's back above the 130 strike for all you bulls out there. But we'll see. Can it keep it? Number 7, AMD. They're giving back some to the market gods today as well. 916 or 4 1/3%. Trading 201.70 right now, putting up 434,000 contracts. They've been on a wild trajectory this year as well. They started out red, then they got nice and green. They kind of followed the Micron trajectory, shooting straight up, got all the way up to about 260, and then they kind of just fallen out of bed ever since. That said, they're not as low as they were just a few weeks ago. They got down to 192.5, I believe, early February. So they're still down almost 10% for the year, but not quite as low as they were. So maybe take some solace in that. That said, we have talked about a lot of 187.5, 190 puts going up in AMD lately. So maybe some folks are positioning for a return to that level. Either way, number 7, 434 on the tape for AMD. Number 6, the Amazonians, 205.40, off 5 1/4, about 2.5%, putting up 440,000 contracts. And unlike a lot of the other names on our tape today, Amazon has just been straight down all day. So kind of interesting, unlike the whipsaw action that Palantir was delivering. Keeping it in the A-Tech names, we got an A-Tech strip. We had AMD, then Amazon, and then rounding out our A-Tech strip today, listeners, it's the Fruit Company, 271 3/4, off about $2.50 or about 1%. So the Fruit Company, even the mighty Fruit Company, turning red today. they've been on a wild trajectory this year as well. They were looking decidedly red. They sold off to about 246 in January. Then they went on a nice tear post earnings. Then they kind of fell out of bed again, down to about 255 again. And then they've rallied again since then, up to 271 where they're hanging out right now, even though they are giving back some to the market gods today, putting up 444,000 contracts. For the number 5 spot, number 4. This name has just been a dumpster fire for most of the year and certainly post earnings. Now, you know what it is. It's Mr. Softy, back below the par strike in the wrong direction. $399.79 off 85 cents today. So I guess you can take some solace that the sell-off isn't that bad yet for Microsoft compared to what we've seen just this year. 519,000 contracts. If you want the update, brace for the pain. They're off 72 handles or 15.3% so far year to date, listeners. So Mr. Softy, no bueno, 519,000 contracts on the tape for them. Number 3, Netflix. This name has been showing some surprising signs of life out here. We're at around $85 right now, up nearly $2 today, or about 2.3%. So pretty much a string of green for them all week. They're up 8 handles or 10.4%. More back and forth around this deal continues to emerge. 544,000 contracts on the tape for them. Number 3, Netflix. Number 2, it's Tesla. You know it. Pretty easy to guess that one today. 404.30 off $13 exactly, or a little over 3%. And they have been mostly straight down today as well. They had a little bounce from 405. They started at 415, sold off to 405 where they are right now. Then they tried to rally it to about 409 and then right back down again. So interesting day for Tesla. It's like that maybe they'll threaten the par strike again in the wrong direction. Either way, number 2, Tesla, 1.34 million contracts. I wonder what option will be in Tesla today. Perhaps we'll be looking at some more par put action. We shall see. Either way, the big dog, you've been waiting for it. It's Nvidia. They're looking pretty big today. 4.25 million contracts already, and obviously much more to come. We have seen Nvidia do far more than this on earnings sessions in the past, getting north of 10 million contracts fairly easily. So can they get there again today? I guess we shall find out. On trajectory for a banger day, though. 4.25 million right now. 185 and a third is where they're hanging out right now, off 10.25 or 5.25%. Again, you got to go back a ways to find another day that's as blood red as this one. And it is pretty much tariff tantrum time last year, really, the last time we saw kind of this level of intraday blood in the water for Nvidia. So interesting stuff. Nvidia number 1, 4.25. Tell you what, we'll do a little fun check-in on Nvidia. Let's just see what's lighting it up. Nvidia is in many ways an index unto itself now. The size, the volume, the action we're seeing on single strikes, the aggregation in 0-day contracts. It's an index in all but name. So let's do a little quick run through what's lighting it up in Nvidia right now. It's the 190. So calls still springing eternal right now. 232,000 of these bad boys have changed hands so far today. By the way, all these expiring tomorrow. $1.83 is the average price on those, followed by 209,000 of the pars. I shouldn't laugh, but 29 cents is the average price for these. These were $4.12, I think, a day ago. So again, that shows you sometimes how capricious the earnings gods can be. If you're rolling the bones on a directional play, that's what can happen to you. $4.12 can turn into 29 cents fairly easily. Let's do a quick top 5. Number 3, 178,000 of the 195. So got a nice call strip. Looks like a lot of these are leaning towards the bid side, so people do seem to be blasting away on these. Number 4, the Flowmaster's friends favorites, the 185 puts, 142,000 of those. Average price for those about $1.60 today. Probably looking a little bit juicier than that. Now, number 5, we have 111,000 of the 187 half puts. Average price for those, $2.30. So Nvidia putting up some numbers. What will be the hot option when all is said and done? Join us after the closing bell, listeners. A little bit of the old hot options report. With all that earnings action, you don't need me to tell you earnings season is still very much in effect. There were some other names popping off this week, if you can believe it, outside of the big dog, which was Nvidia. We had Salesforce yesterday. I think they announced a stock buyback. Snowflake, Zoom, 2 pandemic darlings. All you got to do is throw in Peloton into the mix, and you'll have all the pandemic darlings in one place. WBD popping off today, as well as CoreWeave and Papa John's a pizza. So a lot popping off still on the earnings front. If you want to check it all out for yourselves, you know where to go. TheOptionsInsider.com is the place to go to kick the tires and light the fires. We're going to update the reports with the latest additions from Nvidia and stuff in a little bit on the old website. Right now, the season was hanging out at 135%. Of course, that was before the Nvidia announcement. So we'll have updated reports incorporating Nvidia as soon as we have the latest data. I know going into their announcement, they were pricing in, I think it was about $12 for that straddle expiring on Friday. And it seems like that was with the stock right around 197.5, I believe. So 185 in the stock right now. That puts them off right around 12 and a half bucks. So that straddle seems pretty well priced right now. We'll keep an eye on this and see how things go. In fact, I think we had a poll question about that as well. So I'll be sure to dig up the results for that. As we dig up what the Flow Master's cooking up, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird, time to get wild, time to see what the Flow Master has been up to when he's not talking to us. And, does he have some hot new biotech, some hot new just tech startup in general, maybe a green energy name? Nope. None of that, listeners. We're going old school tech from the dot-com boom. Not Micron, actually. Nope. Blackberry. Good old Blackberry. When's the last time you talked about or thought about or traded Blackberry? What even is Blackberry at this point? They're pretty much just a licensor of the name, I would think, at this point. That said, ticker symbol BB, Blackberry trading $3.48, up about 7 cents or about 2%. The former research in motion. I remember the days when folks were fighting to get into the RIM pit. Seems like a long time ago in many ways. Let's see, Blackberry, not a good year for licensing the name, listeners. Even though they have recovered, I will give them that. A year ago, they did a lot of living in the span of just a few weeks. You remember, a lot of names we talked about last year peaked right around this time of the year, Valentine's Day towards the latter portion of February. That's when a lot of the names outside of the Mag 10 really hit their apex for the year, and most of them never really got there again. And we see this with Blackberry. Blackberry hit $5.05 on February 26th, so exactly a year ago. And by the time the tariff tantrum came around a few weeks later in April, they had been cut pretty much in half to $2.87. So it seemed like the writing was on the wall for Blackberry, but then they said, no, we defy you. We defy our reports of our death. Are greatly exaggerated because they rallied all the way back up to pretty much $5 again in June, $4.87. The stories were being written, the return, the rise of Blackberry like a phoenix from the ashes. Didn't last long though, fell out of bed again, $3.58 in August. And then they tried again, they tilted back, they actually got up to that 5 handle again. They hit $5 exactly in September. So they had 3 tilts at the $5 windmill. And then that last one was all she wrote. They couldn't sustain it after that. Ever since September, they've been pretty much straight selling off. Back to where we find ourselves again, right back at the 3.5 handle and pretty much off $1.50 or about 31% for the year. So Mr. Flowmaster, it's been quite the wild year in Blackberry, the artist formerly known as RIM. What's been catching your eye out here, sir?
Yeah, so I've said this before. When we get a kind of an ugly day, and I generally like to look for kind of the unusual bullish flow because I think that's where I think those work out some of the time more than looking for a bearish flow. Blackberry hit my record, hit my kind of radar today, basically just based on kind of the totals. So we're looking at 17,000 calls versus just 800 puts. And as you said, it's kind of a household name, but at the same time, it's like, oh, but do they even have a business? And as you said, they do have some sort of a business, even if it's just licensing. And and also, what, this stock's up on the day when the rest of the market was really getting hit. So the most active strike is the 3.5 calls that expire tomorrow. So that is also kind of why I'm like around a little bit. 12,000 of these have traded in the kind of 3 to 4 cent range. Some of them as high as 6 cents, but I think the VWAP on them is around 5.7. It's possible some of this is closing. There is some open interest, but it feels mostly like it net opens. I'm not sure they're just kind of looking for the whole market to rebound and maybe Blackberry to get swept up as well. I mean, the stock's right there right now, 350. Very moment. When they bought these, stock was at 348. So, it'll be interesting. And also you got to remember, on the single stock, on anything physically settled, you kind of, even if it closes at 350 or even at 349, the buyer might actually decide to exercise these calls just because they kind of get that free look. And we've talked about the after hours moves as well. So I would be a little bit careful in this. And it's only, it's only $3.50 stock. So I might just kind of lean long a little bit of stock. I mean, calls for a nickel possibly as well. But it's an interesting one. I have a good friend, a smart trader, who actually really likes Blackberry, even though, as you said, it's gotten pretty. It's come back a good ways from where it was, but just an interesting one. And household names, I think, they carry a lot of weight when you have kind of the whole meme stock Reddit crowd pushing a lot of volume through the market.
4 cents at 6 right now, Mr. Flowmaster. You can probably get all you want for a nickel. Take a little nibble on the old Blackberry. Yeah, about 12,000 going up against OI of 1,500. So they're opening these bad boys. Somebody wants to play in Blackberry out here, listeners. When's the last time? Be honest with us, listeners. When's the last time you thought about Blackberry? Well, we're doing it to you today, listeners. So check out that. Maybe you want to take a nibble, a little flyer for a nickel one day to go. What's the worst that can happen? You lose a nickel, right? But you lived. And you could say that maybe, perhaps, dare I say it, you loved. All right, out to, this is a newcomer. I would definitely remember discussing this name on the network before. Who comes up with these names, Mr. Flowmaster? Rich Tech Robotics. So just from that name, Mr. Flowmaster, I'm going to assume they make sweet, sweet robotic butlers with a nice British accent. They're named Jeeves. What do you think? Is that what they do, Mr. Flowmaster?
I'm looking at, I think they make a bunch of like robot sweeper things in the hospitality world.
Close.
Yeah.
But if they're not dressed up with a nice tuxedo and they don't speak with a British accent, I'm not interested. That's what I want from my Rich Tech Robotics. Yeah, this is a fun one, listeners. $2.71. So it definitely falls in the category of one of our cheapy tech names. If the Viceroy were here, he'd be like, just buy the stock while you're messing around with the options. A year ago, they were trading $2 exactly. So they're trading $2.71 right now, so up 71 cents, about 33%. Not a bad little year for them. That said, they had quite the run towards the Q3, Q4 area of last year. They started running up in late Q3, going up into, and then peaked in October of around $7.06. So actually they hit $7.43 intraday. So they had quite the run from $2 to $7.43. Then they fell out of bed by November. So October 7th, they were $7.43. By November 21st, they were back to $3. So talk about short-lived good earnings prospects. Maybe there was talk of an acquisition. Something really popped them, and then it faded just as quickly. They had a second little rebound, though, in January. January 27th, they popped again up to $5.51. So roughly 2x where they are right now. And since then, they've been cut in half, right down to where they are right now, $2.71. So kind of a wild one. I want to dig into a little bit. Maybe I can go buy my dream British Robo Butler. While I'm looking for that, Mr. Flowmaster, what caught your eye out here, sir?
Well, so this one I actually, for some reason, I got a pop up on Reddit in the options forum there, and somebody was actually looking at the flow from yesterday when 11,000 of the 227, so the tomorrow expiration 3 calls traded, and generally looked like a buyer. They were in the kind of the 3-4 cent range, and this was somebody on Reddit saying, "Oh, there's something going on here." As you said, it's a low dollar price stock, so that also can kind of captivate the Reddit crowd. And I actually looked at it and noticed that the open interest didn't move much at all. So this is actually a case of like, okay, there's something odd, because it was a notable trade on something where the average daily call volumes only I think before yesterday it was around 40,000 contracts. So to have 12,000 contracts in one line is significant. It actually looks like it was, some of it opened. It did open, net open about 3,000 or 4,000, but it wasn't kind of one of these really aggressive call buyers, possibly on some sort of information. But I will tell you, the stock is up a couple pennies today, and we see heavy call volume again, 18,000 calls versus 1,500 puts. The flow today is kind of focused in the a little bit longer dated, the March 3 calls, and that definitely looks like an opening buyer in the 15 to 20 cent range. So, again, in channeling the Viceroy, maybe just kind of it's $2.70 stock, maybe just a little stock position in case somebody does have some, is anticipating a decent move in it. I don't know. Robotics is certainly in the headlines with, Optimus Prime and all this kind of stuff. So you never know. But, maybe good for a small position.
Optimus Prime, always in the headlines, sir. They operate, we've all heard of software as a service, Mr. Flowmaster. They operate robot as a service. RAS, that's their business model. So they lease their robots. There you go, listeners. Robots as a service. I love it. They also make some of those delivery bots you might have seen rolling around your neighborhood with Chinese takeout in them, listeners. So yeah, interesting stuff. Rich Tech Robotics. By the way, I do find it fascinating that a stock that is $2.71 puts up 62,000 contracts a day. Yes, that's the ADV. Everyone could go out and buy the stock for $2.71. Instead, they're trading 62,000 contracts a day. That might be a little bit inflated. As the Flowmaster was saying, some flow going up earlier this week, but only 20,000 so far today. Even still, 20,000 for a name like this is wild volume. So this thing puts up some paper, listeners. Maybe you're intrigued. Maybe you want to take a nibble. Maybe you want to buy the stock. Maybe you want to stay the hell away. Maybe you just want some nice delivery robots to bring you some food right now because you're hungry. Either way, keep an eye on this one. As we keep an eye on what you folks have on the brain, it is time for a little bit of the old Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's get out and see what you folks have on the brain. A lot of folks were talking about Nvidia earlier, and people wasting money on the upside out here so far this week. But we have some fun questions. We asked you folks yesterday, and this has about an hour left to go, just a one-day flash poll, listeners. We asked you, hey, what are your thoughts on this Nvidia at the money straddle expiring on Friday? The stock was around 197 and a quarter, 197 and a half, so pretty much right around that strike. They're pricing in about $12 going through earnings into Friday. that price, did you like it? Would you buy or sold to you? You want to trade it in a spread? 46.2% of you wanted to buy it. You said straight up, give me that straddle for $12, which if you bought it, you're pretty much breaking even right now. If you were savvy, if you were able to sell some stock against your gamma, which is not most people, in the after hours, and you did a little bit better, obviously. But that's another reason why trading straddles going into earnings is so challenging. One of the best weapons you have to monetize it, you don't really have. Then selling it straight up about 31%. Right now, you're both kind of breaking even on your trade. We'll see how this progresses. And then 23.1% of you want to be a little bit more risk mitigated. You want to sell that straddle, but as part of a spread. So you want to sell it maybe as an iron condor, an iron fly, something like that, where you're buying the wings to protect yourself. You're smart. You're not an insane person out there. So interesting stuff. Buying that straddle. Again, looks like you can make an argument for both of those potentially working out today. Our actual question of the week this week, listeners, is an intriguing one, very germane to what's going on right now in the markets. No, it's not Rich Tech Robotics. It's about how you like to approach earnings season with your options trading. We had a fun episode of Options Bootcamp yesterday all about this, where we debated it. And we also debated it with AI, see what AI had to say on this subject. It was interesting, eye-opening, maybe a little bit infuriating, all in one, which is what makes that show fun. So check out that episode if you are intrigued. But right now we're asking our audience, very straightforward question. How do you approach earnings season with your options trading? Do you sell juice? Do you buy juice? Or do you avoid it altogether? Mr. Uncle Mike, I have a feeling I know what your answer is. Which way do you think our audience is going, sir?
Well, for my answer, if I were to play earnings, which I don't, I do typically avoid it. Sometimes I might adjust where we're selling a covered call or something like that going into it. But if I were to play it, I would pick a side, whether I'm bullish or bearish, and I would do a vertical call spread or a vertical put spread. It neutralizes the volatility, and you're getting a little bit of time decay, not quite beating you up so badly. And if I'm going to be right, I'm going to be right. Or if I'm going to be wrong, I'm going to be wrong. Oftentimes, I know that the Viceroy would say you can be, since we're talking about him today, you can be right on price movement and wrong on volatility and still lose money. And there is also the potential for you to be right on volatility and wrong on price movement and still be right. And if you're doing a vertical spread, that's a way with which you can just kind of play the price. And I think that our audience would have a similar answer.
Mr. Flowmaster, same question for you. If you have an approach, how you like to approach earnings, you like to sell juice, you like to buy juice, or do you avoid them? And then which way do you think our audience is going?
I would say our audience, because I think we tend to attract some risk seekers, would be earnings vol sellers, even though we've done a lot of discussing how that trade is really pretty unreliable and there's such big outliers, both in, wins and in losses. I mean, the Nvidia straddle last night, I think went out around 8% of strike of spot. And for a little while, it looked like it was going to be a huge winner. So 6% of spot. But, this morning we were flat. And it's like, wow, what a great win that would be. But now, you can see that one is down about what it was priced in. So I would say sellers. And then, and my kind of personal approach is, if there's a name I'm pretty comfortable owning, I don't mind selling the very small kind of, naked put or cash secured put into earnings, knowing that there's a chance it's going to crater and I'm going to own the thing. But I think, I think what Mike said, doing something with a vertical spread is certainly more prudent in terms of risk. The issue is that little tail option really does take a chunk of your premium away. I'd rather kind of sell one cash secured put than 3 or 4 verticals.
Yeah, that's kind of been my approach. We were talking about yesterday as well. Take advantage of some of that juice to maybe get into some names you're attracted to at some more attractive levels. What's kind of interesting about this, I don't know if we just had a bunch of grumpy Gusses come in on the Twitter this week, or I know we do have a few who are sometimes a little bit more cautious with what they do, but they seem to be running away with it this week, which is kind of interesting. Right now, 77.3% of respondents saying they're just avoiding earnings altogether right now, which is, again, kind of wild for our audience. I know a lot of our folks like to dive into the fray. a lot of them also are savvy. They know it's a crapshoot, so that could be why they are avoiding this. But I know just historically, a lot of folks like to trade in and around earnings, Nvidia being example one out there. But interesting stuff right now. It still has a couple days left to go, so maybe some more folks will come in who aren't leaning on the grumpy Gus side. 18.2% of you want to sell premium. So those of you who are diving into the fray, you are leaning dark side. Only 4.5% of you want to buy juice going into the announcement. Maybe you should have talked to those folks who were buying all those Nvidia par calls last night. Listeners, would have saved them a lot of money. So wild stuff out there. That's why we run the polls, listeners. Sometimes we get surprising results like that. And speaking of surprises, let's see if we have any in store for us as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of the week into the Monday show on the old OB and, of course, the ever-important weekend these days. And when Uncle Mike isn't talking a little bit on the show, he's out there busy buying because he and his cabal have been working to try to mitigate this sell-off. It seems like it's working a little bit. The Dow getting close to flat now, off about 0.05%. The S&P still pretty firmly red, but retreating off that about 1% level, about 0.85% now. The NASDAQ retreating off that 2% sell-off level, I put only in air quotes, off about 1.65%. And VIX cash flirting right around 1935 right now, so retreating off of that 20 handle. So it seems like, at least for right now, the sell-off mitigating somewhat, but we shall see what the second half of the session has in store for us. And Uncle Mike, sir, what do the markets have in store for you? What are you keeping an eye on till our next show on Monday, sir?
I think we need to keep an eye on what's happening with Iran. That's a big thing. Seeing if there's any other tariff news coming about. It's for a surprise, which you never know. But I think from a macro level, wanting to keep an eye on Iran, that seems to be the macro pick to watch of the week, so to speak.
Pick to watch of the week. Iran, yes. Uncle Mike's macro pick of the week. Iran. Mr. Flowmaster, do you agree with Uncle Mike's macro pick of the week, or do you want to smack him in the face and call him a few names and give him your own Flowmaster's macro pick of the week?
Well, I agree. I think, everybody knew that he was angry. Trump was angry after the tariffs were struck down. And, I think that people brace for kind of, oh, geez, what comes next? And maybe something with Iran, but I think it's a very different story there than what we saw in Venezuela. So I don't know. I guess I wouldn't be. I'm not bracing for some sort of big shock that way. I do think that if this maybe we're going to rebound a little bit today and just kind of continue to waffle around up 1-ish% year to date for the SPX. But I mean I do think that a couple more percent lower, whether it happens in a one big swoop or we just continue to see kind of these moderate sell-offs, you might get some people that really, have become complacent in terms of keeping, maybe over-invested in equities and just don't really know how to handle losses. And, those you're overextended, then you kind of do the wrong thing at the wrong time. So I would be a little bit careful of that, but that's kind of it. I mean, there's not much left in the way of earnings, and there's a few things out there, but not too much. And just kind of watching, how the market handles what seems to be a little bit of a continued correction, especially among these Mag 10 names. And that Cboe Mag 10 index, I've been trading it. It looks like there's somebody who keeps rolling a 14 lot of calls on it almost on a daily basis. So that's also, that's a way to play that one. And because it's equal weighted, it's got some interesting impact, meaning like, Nvidia, which is a super high cap name, it's actually not blasting it. It's only down 2% on the day, the Mag 10, whereas if it was cap weighted, it would be down more because of the fact that Nvidia is down by almost 6%.
All right, everybody, that music means we've come to the end of our journey through the world of the option block today. If you want more in your lives, join us in a little bit. Just hit next on your device of choice if you want it on the on-demand side. We'll be talking all things futures options with Miss Carly Garner. Should be a good time. She always has a lot to say about energy, nat gas in particular, probably the metals, and a whole bunch of other fun stuff, probably some equities as well. So stay tuned for a lot of that fun on TWIFO. But before we get there, let's go around the horn. Mr. Flowmaster, if folks want to check out all of the Cboe goodness, where should they go? What should they do?
You can just head over to Cboe.com or look at Cboe.com/RMA for risk and market analytics. That's our data, platforms, all the good stuff. And I encourage people to just search Cboe VIX decomposition page, and you can look at that day-over-day change in not just the VIX, but where it came from, meaning are we talking calls, puts, a general increase in overall volatility. It gives you that sentiment perspective as well.
And Mr. Uncle Mike, same question for you. Where should folks go if they want more Uncle Mike goodness in their lives, sir?
Head to stcharleswealth.com, book an appointment with me. Always happy to talk to any of our listeners. If you are interested in having a financial advisor that's not afraid of the option product.
Check them out. stcharleswealth.com is the place to go. We got to get on out of here. Back again in a little bit, talking TWIFO. If you want to hang out in the pro, have some fun, theoptionsinsider.com/pro. Coming up to the end of February, so get your name in the hat to enter for our pro trading crate for the month of February. Trust me, you want to win one of these at least in your trading life. If for no other reason, you can rub it in the Rock Lobster's face because he is ineligible, as he reminds me all the time, much to his umbrage. theoptionsinsider.com/pro. Hey, you can make the Rock Lobster angry, and what better reason is there to do anything than spite? theoptionsinsider.com/pro. Back again with TWIFO, back after the closing bell with all things Thor. We'll see what's lighting it up in Nvidia and Tesla and all that other fun. Then back again tomorrow talking some vol. I got a feeling after today should be some good stuff to talk about with Dr. Vix and other special guests. Then we wrap it up for the week with our pro friends over there on Options Oddities, talking weird, wild, and unusual activity. Before we're back again on Monday for another trivia battle on another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.